On August 5th, Palantir showed amazing results. They reported earnings per share of 6 cents, while analysts were expecting only 3. Recently, Palantir was named a leader in AI and ML platforms by renowned research and advisory firm Forrester. While Palantir proves themselves to their investors and shows that they're actually capable of beating their expectations, regular investors like you and me are still concerned about their very expensive valuations. Therefore, the main question remains whether Palantir is overpriced at the current levels or if it's an amazing growth opportunity. Hey there and welcome to the Market Monkeys channel. It's Julia here, and as you realize, today we will break down Palantir's business, their position on the market, and the risks that potential investors or investors might encounter. Then we will discuss what we are planning on doing with the company's stock, so stick around until the end of this video to not miss this information. I'm pretty sure that most of the people watching this video know what Palantir does, so I'll explain it really shortly, just in a few words. Palantir is a pure play data management and analytics company that serves government clients like CIA, for example, and commercial customers, including healthcare, retail, banks, and many more. The company helps clients analyze, manage, and visualize large amount of data. They offer 4 products. It's Gotham, Foundry, Apollo, and AAP. Gotham is mostly used by government clients for different purposes, while Foundry, for example, is used by commercial customers for purposes like managing inventories or optimizing the supply chains. In 2020, Palantir introduced Apollo, which supports Gotham and Foundry by resolving dependencies, issuing updates, and handling various operational tasks. Recently, Palantir launched artificial intelligence platform AAP. It is a powerful tool designed to quickly integrate AI into business operation, and at its core, AAP connects AI with enterprise data and systems, enabling rapid deployment of AI-driven solutions in just a few days. In general, company operates in 150 countries all over the world, including the US and the UK. Before we continue, don't forget to press a like button if you like this video, comment, and subscribe to our channel. When I was planning and researching information for this video, I realized that the most important question is who's the competitors of Palantir and to which sector this company relates. And the funny thing that there is no simple answer to these questions, but this information is crucial. Without this information, we cannot properly evaluate the company, so let's try and build some frames around Palantir. Basically, Palantir Technologies is a SaaS or a software as a service company specializing in data management and AI. So I will be comparing this company to these sectors and to some of the biggest players in those sectors. Now let's begin with the strengths of the company, and the first one is, of course, their investment in research and development. Palantir's commitment to innovations is really noticeable in the past few quarters. By investing into R&D, Palantir makes sure they stay at the cutting edge of data analytics and AI. A very good example of this is their AAP, and it's actually brought already some results. As I said in the beginning of this video, Palantir recently was named a leader in AI and ML platforms. The other strength is their robust revenue growth. Palantir's revenue grew 27% year over year or 7% quarter over quarter, indicating that there is strong demand for Palantir's products and that they're actually satisfying this demand pretty successfully. The next thing is high gross margins and cost efficiency. The company's gross margin has improved over the years, being around 75% in 2021 and getting to 83% right now. High gross margins reflect their ability to manage cost effectively while scaling its operations. For comparison, average gross margins of Palantir's competitors vary between 60 to 80%, so we can say that Palantir is beating their competitors in this area. And another thing is their innovative approach to selling and promoting their services. Instead of hiring a big sales team to do the usual selling, they've come up with a unique way to promote their services, and this is software bootcamps. These bootcamps are a mix of hackathons, conferences, and parties that last from 1 to up to 5 days. During these events, Palantir's engineers show off their software while attendees get a hands-on sessions. In the same time, they are inviting existing customers to show how they're using their products in their unique and specific ways. So basically, when the software performs well, both the engineers and the clients that already bought the software becoming like unofficial salespeople, and this is pretty exciting and amazing way to introduce their services. Let's move to the weaknesses, but I must confess I did not find many. But before we continue, don't forget to press a like button if you like this video, comment and subscribe to our channel. It really helps our channel to grow and to share this analysis with a broader audience. So the first weakness is an increased operational expenses. While the expenses for marketing and R&D indicate a nice opportunity for growth, they are also highlighting potential pressure on profitability. For the 3 months ending June 30th, 2024, total operating expenses were $444 million, which is a significant portion of the $678 million in revenue for the same period. Although I must mention that the situation is actually improved compared to 2023, when the operating expense ratio or the percentage of revenue that went toward covering expenses was 78. This year it stands at 65.5%. So it's not an issue right now, but anyway, I would like to keep an eye on this specific metric in the upcoming quarters. And the next weakness is of course their high stock-based compensation. Stock-based compensation is basically when the company pays to their employees in the company's stocks instead of just cash. For the quarter ending July 30, 2024, the company gave out $142 million worth in stock-based compensations. The downside is that giving out more shares can increase the amount of shares in the market, which might reduce the value of each individual share that shareholder own, and this process is called a dilution. Next up, Palantir's possibilities, and they're pretty exciting. And the first one is their expansion to the commercial market. A couple of years ago, Palantir was operating mostly in the government sector, but right now they're beginning to expand into commercial markets. And their data analytics services becoming more and more important in the sectors like healthcare, finance, and manufacturing. Palantir right now has an amazing opportunity to grow in these sectors, and I remind you that the big data and analytics service market size is expected to see rapid growth in the next few years. It will grow to $280 billion in 2028 at a compound annual growth rate of 16%. And the next opportunity is, of course, their use of artificial intelligence. Especially right now with their artificial intelligence platform, Palantir has a great chance to capture a major market share. And I remind you that the global artificial intelligence market size was estimated at $196 billion in 2023 and projected to grow at a compound annual growth rate of 36.6% from 2024 and to 2030. And another opportunity that Palantir is well positioned for continued growth. The company's profitability is on the rise, with net income soaring from $27.9 million in second quarter of 2023 to $135.6 million in second quarter of this year, with a strong cash position of $512 million and marketable securities of $3.5 billion, which overall gives us $4 billion in liquid assets. Palantir has the resources to invest strategically in all of the kinds of acquisitions, developments, marketing, and all of the other things they really need to keep growing. Based on the success of their AAP, we can actually say that probably Palantir will continue to grow and to grow pretty rapidly. And before we go into the stock discussion, let's talk about threats of the company. The first one is intense competition. The data analytics and AI sectors are crowded with many companies that are fighting for the market share. This tough competition might lead to lower prices and as a result, lower gross margins, which might affect the ability of company to grow. Interestingly, while I was doing this research, I noticed that most big data analytics market reports don't even list Palantir among the key companies, with only a few mentioning them at all. It basically shows how unestablished Palantir position on the market is right now. And the other two things is basically something that we can apply to all of the companies and to all of the sectors is regulatory and legal. threats. As a non-professional investors, we can only rely on the public information that is given to us, and sometimes this information does not represent the real situation that we are facing. If you're not really sure what I'm talking about, go and watch our SMCI video. Now finally let's talk about Palantir's stock, and for this let's take a look at their valuations. Total revenue increased 27% year-over-year to $678 million in second quarter of 2024. US commercial revenue grew by an impressive 52% year-over-year. Net income grew significantly from $27.9 million to $135.6 million year-over-year. They added 47 new net commercial customers in second quarter, and right now commercial revenue accounts for 45% of total revenue, which is a significant improvement compared to the previous years. Palantir's valuation metrics, specifically PE or price to earnings ratio and PEG, price to earnings divided by gross ratios, are pretty high. The company's PE ratio stands at around 182 and its PEG ratio is approximately 192. To put this into perspective, let's compare Palantir's PEG ratio to their main competitors. Keep in mind that the list of competitors may vary depending on the source, but let's take a look at the next companies. So Alteryx is a private company. IBM Watson Studio. As a product of IBM, comparing it directly is tricky. IBM's overall PEG ratio is quite high, around 4, due to its slower growth compared to its massive size. Tableau is a private company. With Amazon, the same thing, similar to IBM. It's challenging to isolate the PEG ratio of Amazon's big data analysis segment. However, its PEG ratio stands at 213. Splunk is a private. Microsoft with a PEG ratio of 223, and of course Microsoft's range of products and services complicates direct comparison. Let me include a few more companies that I consider a major competitors of Palantir. So the first one is Oracle with a PEG ratio of 205. Salesforce is closer in focus to Palantir's business model and their PEG ratio is 136. And Snowflake is a newer competitor with PEG ratio of 285. As we see, it's really difficult and tricky to compare Palantir to somebody, because either we need to compare them to the small part of a big corporation, and it's of course not possible, or we need to take a look at the smaller companies that do pretty much what Palantir does, but these companies are mostly private. Among Palantir competitors, Salesforce is probably the closest by their business model and by their offerings, and Salesforce's PEG ratio stands at about 130-140, which is less than Palantir's, and it suggests that Salesforce have a more favorable valuation compared to their growth. However, if we take a look at the broader group of competitors, we can see that Palantir's valuation is lower. So basically what it gives us? It gives us the understanding that it is really difficult to compare Palantir to someone, and it's almost impossible to answer the question whether they're overpriced or not. I wouldn't be surprised if in a few years, when more and more companies like Palantir will go public, we will see this kind of new valuations in this sector, and maybe PEG ratio of 2 will indicate a strong performance and growth opportunities. So basically what I wanted to say by this is that I am very thrilled to follow this sector and to see what will happen to it and how will all of this play out. And regarding stock, I am personally considering to sell some part of my position when the Palantir will get to around $36-37, and maybe I will buy some more if the stock will drop to under 20. Let me know what your investment strategy is for the Palantir stock. Your support is very important for this channel, so please don't forget to press a like button, subscribe to our channel, and we will see you in our next videos. Take care.